Hello sir, my name is Chong Yun Ming and my match number is 261598. So I will begin with my presentation with the description of our client. And first of all, his name is Mr. Chong Yun Loon and he is 35 years old and he works as a software engineering in a local software firm, and he will receive 6,000 ringgit for his monthly salary. And he is a husband and also a father of 2 children, and his wife is a housewife, and their children, one is son, one is daughter, and their age is 5 and 6 years old respectively. And the expenses for Mr. Charles every month is he will need to pay the insurance for himself and his wife, which will cost him around 200 ringgit per month, and he also need to repay the housing loan and car loan every month. That will cost him around 1,550, and he also need to repay his credit card bill for 1,000 per month, and also he will spend 300 ringgit for his children education purpose, and he will also need to spend 1,000 ringgit per month for his parent allowance. And besides that, the monthly utility fee and grocery good will cost him total 1,400. So the total expenses per month for Mr. Chow is 5,450 ringgit per month. Secondly, the human life value, whereby it is a present value of the potential earning loss by the dependent because of a person's death, and in other words, it's defined as the total income expected to earn by an individual until retirement. And based on our assumption, we assume that Mr. Chow will be retired at the age of 16, and his annual income is 72,000 ringgit, and his annual income requirement is 71,200, and we assume that a 6% of the inflation rate in the Malaysia, and we calculate the human life value, which is the total income requirement to meet the annual income need for Mr. Chow for 25 years. And after the calculation, what we get is the total annual income that Mr. Chow need is around 964,532 ringgit for 25 years. I think that's all for me, so thank you, sir.
Good morning, everyone. My name is Kah Yong, metric number 262713. Today, I would like to share with you about how Mr. Chow can reduce his income tax payment by using tax exemption. As we know that Malaysia government already set a few tax exemptions for us to encourage us to do something or buy something. Therefore, we can take this advantage to reduce our income tax payment. Firstly, I would like to suggest Mr. Chow to buy a new handphone or laptop which no more than 2,500 ringgit. He can receive of the tax exemption of 2,500 ringgit for the technology equipment. Therefore, he can buy this handphone for the personal use or laptop for his children to online learning. Besides that, I would like to suggest Mr. Chow to bring his family member to travel in Malaysia. He can receive the total amount of 1,000 ringgit for the tourist accommodation in Malaysia. Furthermore, I would like to propose Mr. Chow to buy the medical and education insurance for his family member. Buying this insurance not only can protect his family member, but he also can get the extra 3,000 ringgit of tax exemption. Lastly, I would like to suggest Mr. Chow to save his money in EPF account because it can get the extra 4,000 ringgit of tax exemption. Next, I would like to explain with you about the PMT, which is the annual income can be withdrawn by the Mr. Chow in his retirement life. As before, we already calculate the total amount can be accumulated by the Mr. Chow before he retire is around 9,064,000 ringgit. We assume that the Mr. Chow can live until 80 years old, which means he still have the 20 years of the 20 years of retirement life, and the rate of return after the inflation rate is 6%. Therefore, we can know that Mr. Chow can take or withdraw 175,000 ringgit and 97 ringgit for every year during his retirement life.
Good day, doctor. My name is Amanda Theng, matching number 272142. Next, I want to continue to present the resources that are available for retirement. From the statement of network, we can see that Mr. Chong Yun Ming has manager fund 45,000, quarter stock and share 30,000, unit trust 30,000, and EPF 305,000. So that the total amount of resources that are available for retirement for Mr. Cho is 410,000. First, manager fund. Manager funds is a type of unit trust that is a registered managed investment script. Using a manager funds, investor money is gathered to be used by the fund manager to buy and manage investment on behalf of all fund investors. This means that we do not have to invest by directly in company ourselves. Second, quarter stock and share. Quarter stock and share is the equity investment. Equity investment is a money invested in a company through the purchase of stock in that company on the stock market. Normally, these shares are traded on a stock exchange. Equity investor buy a company stock with the expectation that its value will rise through capital gain or capital dividend. Thirdly, unit trust. Unit trust is an incorporated mutual fund that distributes profit to investors immediately instead of reinvesting gains. The unit trust is managed by fund manager, and trustees are assigned to verify that the fund is handled in accordance with its aim and objective. Unit trust considered as one of the assets that may be quickly be converted to cash. These investments are generally low risk and high liquid. Lastly, the Employee Provident Fund (EPF) is a national social security institution that operates a provident fund plan. The primary goal is to offer members with retirement benefits. These contributions are separate to two accounts, which are account 1, 70% for retirement use, account 2, 30% for medical, education, or home loan withdrawals. That's all for me. Thank you.
I'm Yong Jie Yi, metric number 269653. Today I'm gonna continue to present about the number 6, which is risk tolerance. So we can see this is the risk profile of Mr. Chong Yun Ming. So the total score of his risk profile is 12 points, which is medium risk. So we can say that Mr. Chow is a middle-aged investor that cannot afford to take high risk because he has a family. On this risk profile, we can see that Mr. Chow expressed a moderate willingness to take on risks, and he is a moderate risk taker that often aims for balance between returns and risks. So he will seek big profits with a risk level that is acceptable for him to invest.
Good morning, Doctor. I am Lim Sau Loon, metric number 264080, and I would like to present about the 3 potential investments that will fit our client risk profile. Since our client is a moderate risk taker, we would like to suggest 3 suitable investment portfolios that consider as low to medium risk in separate time length, which is short term, intermediate term, and long term. The proportion of the portfolio that we suggest is 30% on treasury bills, 40% on bond funds, and 30% invest in exchange traded fund. First of all, the Malaysia Treasury Bills (MTB) is a short-term discount security that issued by the government of Malaysia. It matures in a short period of time, which is less than 1 year. This is a risk-free investment with a fixed interest rate return around 1.8% since it was backed by the government. The reason that we suggest our client to invest in T-bills for the short-term investment is due to the liquidity of the investment, and our client might have the probability to face with the limited cash flow since our client is an employee with a medium income earnings, especially for the current situation of COVID-19 pandemic. Moving on to the bond front, the reason that we suggest our client to invest in investment bank bond fund is because the fund is managed by the bank's experienced manager, and the fund has variety of government bonds and corporate bonds, where the client could enjoy the advantages of secure in return and has the potential to seek for the higher return compared to both corporate bond funds and the government bond funds. Bond fund is a stable investment with a minimum risk that allow a client to earn the average interest around 3.8% to 7% per annum. It's also a liquidity investment that comes with the purpose of children educational fund. Lastly, we would like to suggest our client to invest in Standard & Poor's 500 index, S&P 500. The advantages of the Vanguard S&P 500 ETF is the expense ratio is as low as only 0.04%, where it has not charged the sales or the application fees. For every 10,000 of the investment over the 10 years, the fee is only $71. Moreover, the largest component includes the Microsoft, Amazon, Apple, Alphabet, Facebook, and other giant corporations from United States or America. We will also suggest that our client invest in this ETF until he retires. This is because the average return of the index fund is in the last 30 years is about 10% per annum. If our client choose to invest in S&P 500 index fund until he retires, he is expected to enjoy his retired life without worrying of money. And that's all from me. Thank you.
So next we're gonna look at the importance of doing estate planning. So what is estate plan? So estate plan is a series of paperwork that protect your estate, include your personal property such as home, car, investment, furniture, life insurance, bank account, and personal possessions. So it could explain how you intend to pass down your asset and personal property in detail. So why do you need estate planning? So it is important to do estate planning because it can protect your beneficiaries. So if you pass away without do an estate plan, so the court are the one who decided who will receive your asset. So the probate procedure involves the paperwork and the court appearance by lawyers, which may take months or even years. So it may be incredibly costly for remaining family members to settle the legal bills. So estate plannings may be greatly minimize the time and the cost. Besides, young children are protected by having an estate plan. So Mr. Chow, as the father of 2 children, should prepare for the unpredictable incident in the future. You should appoint guardians for your children if both parents die before they reach the age of 18. So this is to guarantee that they are cared in a manner that you decided if something unlucky that happened to you. So it is essential for Mr. Chow to make decision on how to divide your estate evenly and begin to making plans for future wealth transfer now. So estate planning is not only for the rich family, and it is not time-consuming or costly procedure. So an estate plan can be customized based on your requirements, financial concerns, and family situation. So it is better to start to do an estate planning as soon as possible. That's all from us. Thank you.